Hey everyone, welcome back to Upside Down Data. In this video, I'm going to talk about DOT, give you an update on what the UDPI risk information is saying about DOT's recent price action, and also give you an update about DeFi developments in Polkadot's ecosystem that could have implications for price. So if you guys like the content, subscribe to the channel, give the video a like, and follow us on Twitter. We put out regular updates there about our risk indicators and more. So I've got the DOT daily price chart up here, and you can see that it's been in a pretty nice move over the last few days. After the market was as oversold as it was, it's not entirely shocking to see a bit of a relief rally across the market. Although that's easy to say in hindsight. We've been waiting for a relief rally for a long time, and it's finally here. So DOT is one of the assets among many that has seen some relief. I think that DOT's price action looks pretty interesting just at a glance. If you just take a look at the second half of January when the market really went into this deep dive and DOT dropped all the way down below 16 bucks, and then kind of showed this rounding kind of grinding action that has brought it into the move that it appears to be in currently. We'll see how long it lasts. But even at a glance, I think this is interesting, particularly if you look at it in combination with the volume profile. My interpretation of this kind of price action is that as DOT reached these sub $20 levels, so much of its realistic downside potential was being realized, even as the rest of the market wanted to go lower, that DOT really just didn't have much lower to go. We have these long wicks on the daily time frame from the $16 region up to about 18, which shows the buying pressure that came in there as DOT followed the market lower. But it really wasn't realistic to see it stay at those levels given the demand there and given how oversold the asset has been. And so the price just kind of resisted that market pressure to go further down, started recovering, in the first batch of assets, at least among the, larger cap assets, and has now been, moving into quite a steep, price appreciation here. What we haven't seen yet is a major influx of volume on the daily time frame to support this move. And so that's what I think we want to be looking for on DOT. Promising price action, but then again, approaching some resistance regions where there's historically been, quite a lot of battling between the bears and the bulls. And that's also true, across the market and many assets, including Bitcoin, having, made a move over the last few days are going to be approaching some resistance regions. So, now is probably not the time to ape into a long, but, there's certainly lots of encouraging things on the chart here. We're going to wait and see what happens. If the volume comes in to support this move, that would make it quite convincing. But as of now, we're still kind of tentative, at least on the short-term time frame. Now, what I want to pull up next is the upside downside potential indicator for Polkadot. Here I have the long-term chart up for DOT. What you're looking at here is the upside downside potential risk indicator, color-coded on a daily time frame. So each one of these dots is a day, and each day is color-coded by risk. And so when you see green, that means that risk is relatively low. That means the model considers upside potential to be more realistic than downside potential. That downside potential has already been realized. That's the situation that DOT has been in for a bit now. When you see it turn red, obviously that means the opposite, that risk is elevated and that downside potential is more realistic than upside potential. On the long-term time frame, DOT's risk has been quite low for a bit now. I mean, we saw that flip toward the end of 2021 into the green territory in November, I believe. And we've continued in a downtrend on price and on risk. The risk bottomed at nearly -5, which indicates that it was almost an unprecedented pullback for DOT, although not quite. On the long-term time frame, it didn't quite reach that -5 level, which indicates that the July 2021 bottom was even more severe. But this was, right up with that in terms of how serious the downside move was and how much of the realistic downside potential was in fact realized for DOT. And so from the perspective of the long-term UDPI, it makes a lot of sense that this would be a reversal point, at least temporarily, because, you know, it was already flirting with doing something unprecedented in its own price history as far as downside goes. So instead, what we've seen in the short term is this bounce, and risk has reverted to the upside for now. So that's what we see on the long term. We can also look at this just in terms of the UDPI output. This is again the long-term UDPI chart. The long term is meant to be interpreted on a time frame of at least months, if not years. So this is a very patient model. It doesn't react to intraday price movements. It's trying to assess where risk is in the context of market cycles as a whole. And so we see this reversal happening. The downside, brought it all the way to the low -4s, almost at a -5, and now it's bounced and is sitting at about -4. The only time in DOT's history when we've seen a move like this on the UDPI was, as I mentioned, back in July 2021, or, that May to July move, if we want to talk about it in that way. And, that led into a decent price recovery where the UDPI made a move back up to +2. This has only happened once before in DOT's price history, so we can't make too much of any one event. History often rhymes, but it's probably not going to repeat exactly. But still, I think the point is that it's a rare occurrence to see risk get this low. And even across the market, even as many asset risk levels have moved down into low risk territory on a long-term time frame, DOT was one of the hardest hit. And it's been one of the most appealing options from the perspective of risk for a bit now. We've talked about that on the channel, have identified DOT and also Kusama, which is its canary network, a related project, which is correlated with it in terms of price. Both have been very oversold from the perspective of the UDPI. And so that means that the model considers there to be quite a lot of realistic upside potential for DOT on the long-term time frame. We also have medium and short-term time frames. So the medium-term time frame is a little bit quicker, reacts a little bit more quickly to price action. It's meant to be interpreted on a time frame of about weeks to months. So still not an intraday indicator, but a little bit quicker. And so we can compare, we can see what the medium term is telling us here. And there's quite a lot of confluence. We see very similar patterns. The risk has gotten down again to that -5 level. I believe it actually did touch -5 on the medium term, even though it didn't on the long term. And, we're seeing a similar reversal, obviously on price and also on the UDPI. So the medium and long term are telling us something quite similar now about where we are in DOT's market cycle. We can also look at this in terms of just the output of the UDPI. I was mistaken. The medium term did not hit that -5 level either. I think I was thinking of the short term. We'll get to that in a moment. But let's focus on the medium term here. We see, again, very similar, just below -4, approaching that level. So confluent with the long term. You can see that it's a little bit more volatile than the long term, more of these kind of ticks on the map here. We have more changes of direction on the medium term than we do on the long term, which is consistent with the medium term being a little bit quicker to react. So you might notice that as being a difference. Short term, we have, we had a period here of extremely low risk, quite confluent, but we can also see that, on the way down, risk began to rise again on the short term. That didn't happen on the medium or long term. So, right around New Year's, the short-term risk began to rise again, and it began to approach that zero midpoint before that second half of January move across the market, which, was very steep and brought things down very quickly. We'll see whether that turns out to have been kind of that terminal move, that blow off move to the bottom. We'll see about that. But In any case, that brought DOT's short-term risk back toward the downside as well, leading into this bounce. So, we can see this confluence across these time frames. They're agreeing with each other. I think it's worth pointing out that that doesn't always happen. You can have bear trends and high risk zones on the short term, even when from a long-term perspective, the asset might be very low risk. So these things can move independently, and we do see that sometimes. And so when they're all kind of agreeing with each other, that's important confluence, because it suggests that whatever kind of resolution you're interested in, whatever time frame you're focused on, and whatever time preference you have as an investor, that you can draw, at least broadly, similar conclusions. That's the situation that we're in for DOT now. This is the short-term UDPI, which did in fact bottom at -5, which means that on the short term, this last move that started in the second half of January and lasted until just recently was as violent to the downside, as unexpected from the model's perspective, as any that it has seen in its history, in DOT's history, that is, more so, in fact. So this was kind of anomalous. It was an unusual downside event for DOT, and it realized a lot of downside potential, which, the model considers to be relatively exhausted, most likely. So what I'm going to show you next is how these map onto each other, because one thing that I've talked about in previous videos is how you can get more information by comparing multiple time frame risk indicators than you can get from any one of them alone. So I've just brought back the medium term here, and I've overlaid it over the short term. That's why I have the short term in red, just so that we can differentiate it from the medium term, which is still here in white. Now, DOT recently produced a situation that it has never produced before, which is that we had a very low risk reading, a very extreme reading, and the short-term indicator became even more extreme than the medium-term indicator. That has happened only at more moderate levels. So the only other time to the downside when that happened previously was back in May 2021. And there, that kind of divergence, or that cross to the downside of the short term below the medium term, was still above -3. So it was not in extreme oversold levels. And it did continue downwards, both in terms of risk and, of course, in terms of price. But this is a new situation for DOT, which is that the short term got out ahead of the medium term temporarily at a very extreme level. In fact, at the most extreme level that the short term has ever been at. And so we got this unusual situation. Usually, the shorter term time frame is less extreme than the longer term time frame. So in this case, the short to the medium. If you look at this on Bitcoin, and we've done that in previous videos, and we'll probably do it again, you can see that those situations tend to mark reversals. Maybe not on the exact day that the price reversal happens, but it tends to happen in the vicinity of a reversal. So when you get the short-term UDPI more extreme than the medium-term UDPI, either to the downside or the upside, that tends to be around the time that a trend reversal happens on price. And that's really just a function of what it represents when the short term gets out ahead of the medium term. It represents that there's been an acceleration. So in addition to things getting extreme relative to the asset's price history as a whole, when you get this reversal, the short term out ahead of the medium term, it indicates that there's been an acceleration of that unusual trend. And that's typically unsustainable. And I think that's the situation that we found ourselves in here with DOT. Reinforcing that interpretation, we see that has now reversed very quickly. Now we have the short term back above the medium term, heading toward the midpoint, starting to realize some of this substantial upside potential. And the fact that the short term is leading that after having gotten down below it in risk indicates that we had that acceleration, it was unsustainable, and it's now reversed rather quickly. So the risk information here is consistent with the bottom being in for DOT. That said, the risk information could be wrong. There's no free lunch. We don't know what's going to happen. All we can do is play the probabilities. But the probabilities here for DOT, among others, but particularly for DOT, given its price action and given its risk profile, it's pretty good for the time being. We'll see. Just to sum this up here, long, medium, and short term, all still fairly low risk, meaning that the model considers there to be plenty of realistic upside potential on all three time frames, although a little bit less now on the short-term time frame. So maybe we'll start to see a slowdown, but a minus 3.63 even on the short term is still quite low risk. So we'll see what happens there. One other thing that I wanted to share with you here is potential catalyst for DOT, because as you might know, if you've been following DOT, Polkadot parachain auctions happened in the end of 2021, or they began then. They're still going on now. And the winners of the earliest auctions have seen their products go live. Acala was the first parachain winner, and Acala is now live and they're rolling out functionality. So they've been distributing their crowd loan rewards to people and NFT rewards, and they've been starting to roll out functionality. I think the key thing here from a user perspective and from the perspective of what its implications might be for the price of DOT is that Acala, which is a DeFi-focused layer 1 blockchain, is going to start rolling out DeFi functionality supposedly this week. I'm recording this on Monday, February 7th. So it's only a matter of days, according to Acala, that there's going to be DeFi functionality available on the Acala blockchain. And Acala is supposed to be, it brands itself as the DeFi hub of Polkadot. If this is successful, if everything works smoothly, if it attracts people in with nice incentives for participating, for providing liquidity, for staking, for whatever functionality they offer, then that could be a nice catalyst on the price of DOT. This is a thread where you can get some information about what they're planning. A couple things to highlight here. The first thing that they're going to roll out is a liquidity pool for Polkadot with liquid crowd loan DOT, which is a product that Acala is offering, where people who locked up their DOT to support Acala's crowd loan are given liquid crowd loan DOTs, which are tradable assets, which also can be locked up as collateral or used in the Acala DeFi ecosystem. And that can be exchanged at the end of the parachain auction period, which is 96 weeks in total, back for DOT. So I expect that these are probably going to trade lower than DOT. It'll be interesting to see how much lower. I mean, there is one thing to compare it to, which is BDOT, which is Binance's version of this, a similar kind of idea where people who locked up their Polkadot on Binance got some BDOT. And that's been, a good bit lower in price than DOT so far. And so, we might expect to see something like, 65% of the value of DOT per LC DOT. That's really just a guess. So, don't take that to the bank, but, maybe we'll see something in that ballpark, give or take. And maybe that'll, increase as the term of the parachain goes on so that, it'll be sooner when people can trade back their LC DOT for actual DOT. But you're going to be able to use it in the meantime, is the point. So there's going to be this liquidity pair DOT, LC DOT. There's also going to be, some other interesting things that involve DOT, including liquid staking, which is a way to participate in the Polkadot network with your DOT and gain yield while still having liquidity. So getting a proxy, which you can then use for other things that you can trade or you can use in other DeFi yield-bearing programs. So I think this is going to be interesting because it has some unique dynamics, especially this LC DOT thing. On the one hand, this is clearly a potential catalyst for the price of DOT. It could catalyze demand. People will accumulate DOT so that they can come into Acala and participate. On the other hand, it's possible that some of that money that would go to DOT, or that initially will go to DOT, will eventually trickle its way into LC DOT, and that will actually have a dilutive effect on DOT. In a sense, there's more DOT to go around, given that LC DOT is available and other comparable products like B DOT. So there's some interesting dynamics to watch here. Some kind of potential bullish implications, I think very highly likely bullish implications, but also potentially some bearish implications, or at least a limitation on DOT's upside potential, maybe, that could be caused by this LC DOT product. So we'll be watching. I think this is an interesting new opportunity. If you're a DOT holder, or if you're interested in becoming a DOT holder, then this is something to check out for sure. So we'll see what happens. Hope you guys found this overview useful. Thanks for watching.